Hello and welcome to Alpha Action. I'm Ramil Patel.
And I'm Yusuf.
So let's just get started with what's going on in the market. So yesterday, Monday, we saw weak Eurozone data, right? That initially just gapped down the market at like right at the open. Initially started to go up at like 9:30 to 10, boom, straight down. Slowly though throughout the day it went up, and in the aftermarket, there was trade war news that came out that said that basically they're going to a settlement. And that then brought the markets higher. Here's what I really think about the trade war news, and you could throw in your opinion if you want, but it's just a back and forth. They say they're putting on tariffs, and they do this and they do that. And it's just a back and forth again and again. And I think it's going to be a longer term issue that's never really going to get resolved.
They're not going to get anywhere.
Yeah. Because if you look at it, what they did was that they had the tariffs, and then they said, oh, okay, we're going to do all this, and we're going to meet. Nothing happened. Tariffs even more, like from 10 to 25%, and then we're gonna meet, we're gonna do this, and then nothing happened, and then again, that happens again.
Yeah.
And so it's back and forth, and then they said there was a whole currency manipulation thing, which we talked about how it's not, and I believe in the first episode we talked about how currency manipulation wasn't actually taking place. They just dropped the currency. They didn't actually manipulate. And I think over the next 10 years, the yuan is actually gonna get stronger against the dollar. But really, that's just, that's like short term what's going on in the markets, what's driving this currently. And then in the background, you also have economic data coming out. We're going to have to wait for this CPI. I really want to see what's going on, the core CPI, but we're going to have to wait for that coming up. Yeah. And obviously, the weak Eurozone data, seeing how that affects us over here. And of course, rate cuts and all that. One of the first things that I want to talk about is capital efficiency. So you might say there are many people out there, and I really don't like index funds. Do you like index funds?
No.
I feel like we've discussed this before.
Yeah.
So I've never put a single penny in index funds. You haven't either. But say like you're one of those people who really like index funds for whatever reason. I really don't like them. We point out the problems in the first episode and why it's turning into a bubble. But let's say you really like index funds. You could put your money in the NASDAQ 100 fund, QQQ. That's the ticker symbol. And you could also, as an alternative, just sell a put and buy a call right at the money. And if you sold a put and bought a call, it would be more cost effective to do that. And so that's what I want to start getting into, is something that is more capital efficient, right?
Yeah.
We as traders need to find the most capital efficient way to do the things that we can. And so I feel that over here we really need to discuss the capital efficiency of certain things. And so that brings me to my first strategy. If you're someone who's like, I'm not good at fundamental analysis, I'm not good at technical analysis, I need a trading strategy, what you can do is that in the description below, if you're watching this on the YouTube channel Alpha Action, I will provide a link to the website that shows very high IV rank stocks. And based off of that, usually the IV rank will then go down after something like bad earnings. And actually, we're going to talk about that with ulta, right?
Yeah.
Yeah. You have the ulta trade on there. And so like bad earnings, they might be up there because of earnings coming up, trade war, all of that. If they're up there because they just had bad earnings, there's going to be a huge IV rank, but that IV rank usually goes down like it did with ulta. And that's usually going to happen right after really bad earnings, and the market will just reset itself. And that's a good time to apply the strategy called the Jade Lizard. And now with the Jade Lizard, all it does is that you're selling a naked put. Yeah, so it might be $100, selling naked put at 90, and then you do a call spread on the other side by selling a call at say 110, and then buying a call back to back up that one call at say 115. And so this is something that beginners should like, because it's very capital efficient. For the same amount of capital, you're able to do a lot more. I know lots of people where all they do is that they sell naked puts and they gain money from that, but this is a good upgrade from that because you're doing more. And if you sell more, then you're being more capital efficient. You're using the same amount of capital, but you're selling more.
You're getting more, yeah.
Yeah, so same amount of capital, selling more, you're now being more capital efficient. And that's why oftentimes, if I can, I always try to structure trades with options, because with options, you're able to risk less than 1% of the stock price and get the same return as the stock price, or probably even more oftentimes. And so it's all about that capital efficiency right there. And so we come upon ulta. And if you didn't do a fundamental or technical analysis on ulta, I would still say do the Jade Lizard on ulta. Sell it at the money put, and then slightly, I would say like not way out of the money, but also just not slightly out of the money, but a good amount out of the money. Do a call spread, make it expire in about 3 weeks. And I do that on Ulta. And that's if you hadn't even done a fundamental or technical analysis, you just said Ulta has a very high IV rank, and that will go down. And you can look on IV rank screener, and if you're watching this on the YouTube channel Alpha Action, I will provide a link in the description below. It's going to show you anything as an IV rank of 95 or higher, and after something like earnings, the IV rank will usually go down. So with that said, you want to start talking about Ulta and what happened?
Yeah. So what Ulta is, to begin with, it's the market leader in U.S. beauty personal care retail industry, and it has 1,200 stores all across the U.S. and it has $7 billion in revenue and $700 million in earnings, and the market cap is $14 billion. So they offer a lot of beauty care products, as well as services in store, so they can do your makeup or different services. So yeah, and they're actually releasing a new product in their shelves in the coming months. So that's gonna bring their stock price up a little bit because it's a new product. People tend to buy new things.
Right.
Yeah.
And so with that, with that said, they had earnings where they dropped down like 35+%, right?
Yeah.
Yeah. So
This week.
Yeah. So with that said, when they dropped down that much, there was just a gigantically high implied volatility, and so that was a good time. And I don't, by the way, like right now I'm not overly bullish on it, but I'm not bearish on it either. I'm sideways to bullish, like slightly bullish on it. And I would say that this valuation is a bit too low for the things that you pointed out.
Yeah.
And so I don't think it should go back to like $370 or something, or I believe it was somewhere around there. I don't think it should go back up over there. But with that said, I still think it should have a higher price than this. What do you see right there? Okay, it was at 340 right there. So I don't think it should be getting up back to that level, but still, I think that this valuation around here is fairly good. Might be a bit more bullish on it, and so that's all I have to really say about Ulta. And then you could look at the technicals for Ulta, and
it went down by $100 in like a few days, and I wouldn't invest in it long term either, because Amazon has a really big presence right now.
Yeah.
And people are just buying beauty products there instead of having to go physically to a store and buy them that way. It's just easier to buy from Amazon. So I think Amazon is gonna win the long-term game.
Right. So as a short-term swing trader, I think it would be a good trade. But if you're a value investor, I wouldn't be looking into this.
Yeah. No.
Yeah, and even then, 20 times earnings for long-term investors is not that good. But in the current market that we're in, all their valuations are just bloated. And we talked about in the first episode how index funds are very price indiscriminate and valuation indiscriminate and all that, and what's causing the market to have such high valuations on certain things and such low on other things. So right now, compared to the rest of the market, it might be low. But if you're a longer-term investor, you're looking at 40, 50, 60 years, it's not. So that's right there. That's the first thing we have right there. And then we have BMY. And so this would be Bristol Myers right here. And so on this, I think this one's trading for a fairly low valuation. Yeah. It used to be at a high of $65, and since it got to a low about 42, and it since has lifted up. But I think it has a lot more room to run. I don't think that it should be that people should be downgrading it as much as they do, and the valuation on this is actually pretty good. Like when we were looking at this, it was about 15 times earnings, right? Yeah. It's a fairly good valuation, and it is a bit more defensive by nature. And so on this, I would very simply just go ahead, and I would probably go ahead and put debit spreads on this, and you can do the debit spreads just slightly out of the money, and then every time the debit spread makes the amount of money that I can make, you get rid of it and then you put another debit spread on, and then you get rid of that one, and then you put another debit spread on, and do that again and again until about December.
Okay.
And then when you're doing the debit spreads, make it go out about a month in expiration, just slightly out of the money. And so that's really just what we're talking about over there. And then we got ticker
SEC.
Yeah.
SES actually.
Yeah.
Sorry about that. They're a mobile operator company. So it's been down quite a bit today, actually 16.06%. So it's not doing so well
Yeah.
short term.
Yeah,
This
so
week,
even
yeah.
like short term, but if you look at it long term, like if you pull up, like I'm looking at this on the 3-year weekly, look at like if you actually got the max right there, you
Yeah.
got the max right there. If you go look at that, you can see that it used to be at its highs. It used to be
a lot more,
$800 plus dollars or around that, I believe. Like how high was
At
it?
its highest, it was 882.
882, so almost $900, and right now it's trading as a penny stock.
Yeah,
But
$2.
just fundamentally, that's technically speaking how high it used to be and how terrible the chart looks for it. But recently, though, what we've seen is that the earnings per share is just so low. It has an earnings per share of about -7, and so that's just in large. It's not a good thing right there. And it's probably going to go bankrupt in no time. If we look at the volume, on this thing, it's dropped dramatically. Nobody's trading this anymore. And I was actually, I was talking about this a bit earlier when it used to be just like less than a month ago. It used to be at like $4 or $5. Just less than a month ago, I believe. It used to be that high.
Yeah, $4.
Yeah, and so I've been looking at this thing for a long time, and on this, you could very easily do a covered put if you think that's too risky to short it. At $2.50, there's a put option that you can sell, and then you can also short it at the same time. And since it's slightly in the money, you could just collect that premium right there.
Yeah.
And along with that, just naked short it. There's many ways of going about it. You can also collar it up if you're worried that it could make a return, whatever it might be. But fundamentally and technically speaking, it's terrible.
Yeah.
It's terrible.
I mean, it hasn't gone up at all. Like it's always been going down.
Yeah,
If you
consistently.
look at 1 day, 5 days, month, 6
Yeah,
months, it's always
years
been
and
going
years,
down.
years and years. And then the next one we got is SLV. And what generally happened was that the cyclicals were bullish, and then next the fixed income was bullish, and then next the silver was bullish. I think we're still going to see that same trend going on.
Yeah.
And right now it's silver's time to shine. And so right now, if we're looking at this, you're going to see that SLV is currently at $17.33 at the time of this recording, $17.33. I would do a credit spread on that, just slightly in the slightly out of the money, I guess, for that.
Yeah.
But if we're looking at it, and then just a credit spread going out to October, I would go out on the put side, and I'd do one right there, probably at the strike price of 18 and 18.5, or 18.5 and 19. I'd go ahead and I'd do it right there at that strike price.
Yeah.
And then another way of playing this is through the 3x leverage. And so there's a ticker JNUG, JNUG, and you could do it right there.
So it's basically 3 times what
Yeah.
would normally be.
Yeah, 3x leverage gold. It's 3x leverage on the GDXJ.
Yeah.
That's the GDXJ is just junior gold miners, and GDX is senior gold miners.
Yeah.
But yeah, 3x leverage GDXJ. And you can do it on the strike price of 84, 85 credit spreads right there on the put side. And so I think that's generally a better area to be doing such a thing on right there. And coming up, as I said, core CPI, I expect it to be more inflation, and I expect more rate cuts coming up.
So another stock we want to talk about is Boeing, and it has really high volatility. So in the sideways market, you would want to do the chicken iron butterfly method for options, because it has really high volatility. It's
Right.
fluctuating a lot. So you'll make really good money and it's a safe method.
Yeah, chicken iron butterflies because volatility, I don't expect it to stay this high. IV rank is pretty high, and so you're going to get a high premium on the options.
Yeah.
And we simply don't expect it to stay right
No,
here.
no.
And so, right there, chicken iron butterflies are a good way to take advantage of it. And
Yeah,
traders
perfect.
oftentimes there are three ways to make money in the market: price action, IV, and theta. Traders oftentimes just focus on price action. If it goes up or if it goes down, that's the direction.
Yeah.
They don't focus too much on IV, so volatility skew, changes in IV, all that good stuff. They don't pay too much attention to theta. The other two ways are great ways to make money that people usually don't pay attention to. You don't need to know where the underlying is going to go to do that. Or if
Yeah.
it's going sideways, that's also a great thing to do. And then another one before we go, ticker AXP, American Express Company. I think this one's going to start going bullish. It's been going quite sideways for a while, but after this, I think we can see a pop. I think that a at the money credit spread is probably going to be a good idea. Bull put credit spread right at the money, generally going to be a good idea to go on the bullish side of this bet right here. And the technicals are starting to line up for it too.
Yeah.
It is fundamentally is trading at too low of a valuation right here. So that's what I think. You have anything to add on that or no?
No. Yeah.
Okay. Just a disclaimer. Yusuf and I over here at Alpha Action, or for that matter, anybody at Alpha Action is not responsible for any losing trades and is not held liable to bear any losses. And none of us here are your fiduciaries. Contact a financial advisor and use your own due diligence before following anybody's advice. Thank you.